still do the recording. And also, so I hope all of you could see the screen. So screen has been already been shared. Okay, so are you ready? Okay, so if you you haven't been ready, just please record the last few pages. We talk about the audit opinions. We mentioned 5 different audit opinions, right? And remember in the second type, so now in addition to unmodified with emphasis and matter, actually now there is another type which is similar to this one, which is unmodified with other matter paragraph, right? And so we need to understand in which situation, what type of audit opinion will be arrived. And also need to understand the difference between emphasis matter and other matters. And also under which situation emphasize will be a more, the EOM will be more appropriate, and in what situation, for example, inconsistent information, other matter will be more appropriate. Okay. And also a lot of cases would be relevant to going concern, but for different types of going concern issues, the audit opinion could also be different. Hi, hello, Vivek.
Hello.
Hi, hello. I think you were not in the 5 p.m. tutorial.
Yeah, I was not there.
Yeah. So what I'm going to do is, so because we didn't, we got a very, very extended tutorial this week, because last week we didn't do the lecture. So done the mini lecture and also cover the tutorial questions. So that means in 5 p.m. I didn't finish all questions. So in this 8 p.m. tutorial, I'm going to continue the questions, which are the questions regarding the audit opinions. But after finishing that, if we still have time, I'm going to, so for yourself, we can also go through the previous parts. Is this okay for you?
Okay, madam, no problem at all.
Okay, yeah, that's good. Okay, so I think for the questions, because those questions are from the tutorials, you're still supposed to do the questions by yourself. So without the previous discussion of the lecture slides. So you should still be able to do the questions.
Okay.
Okay, yeah. So currently, the question for us is 1223, which is a question regarding the audit opinions. Okay.
Yep.
So what what we want to do is to read the question by yourself. Then write up your own answer to the question, and then we are going to do the first discussion. So probably I gave you, suppose here we have 3 different cases, 3 different mini case situations. For each of that, let's say each of the situation is 2 marks. So that will be about 6 marks in this question. So on each mark, that will be 2.5 minutes. So to finish this question, you are supposed to finish that in 10 minutes. Of course, in the tutorial, I'm not giving you 10 minutes. Can you just finish that? Read the question and think about that, maybe in 2 minutes, please. And when you're ready, just let me know. Ready? So are you ready for the discussion?
Yes, madam.
Okay. All right. Yeah. So when we read this question, so basically there are three different different situations. So usually in the question, they have identified those three situations are independent. Okay, so that actually means you are going to analyze each of the questions one by one and no interaction across them. Okay. So how could we do the analysis regarding the audit opinion? So in analyzing those type of questions, so an opinion should be given and also should be explicitly given, right? And also need proper explanations to support your argument. So this argument, this explanation need to be concise, but need to be to the point. All right? Okay, so let's see the first one. So Helping Hand Limited is a non-for-profit organization. You discovered it doesn't keep substantiating vouchers or receipts for more than 65% of the expenses, excluding salary and allowances. So remember, you have 5 options or 6 options of the type of opinions, right? Could you remember this case and then go back to the previous slides? Modified? Okay. So under modified opinion, actually, there are 3 different types of modified opinion. Is that right? So, and as we discussed, so based on the reasons of the modification, there are 2 main streams of the reasons. One is material misstatement. The other one is limitation scope. So for situation A, it is about material misstatement or limitation scope. So due to limitation from Kim, so this one is about limitation of scope. So because blah, 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 so the company didn't keep substantial vouchers or receipts for 65% of the expenses, right? Not keeping important accounting vouchers and records regarding expenses. But there are two types of modified opinions under the category of limitation scope. One is qualified, the other one is disclaimer. What's the difference between those two? So one is material, the other one is not just material and also extreme material, pervasive, right? Okay, so the pervasive level. So for situation A, do you think it is material? Yes. And also, do you think it is pervasive? What do we mean by pervasive? Okay, so yearly when we evaluate the materiality or the pervasive level, we may think by nature or by amount, by, let's not say amount, the magnitude, right? So let's first think about the magnitude. How much has been affected? 60% of the expenses. So apparently it is material. Is this also pervasive? Really depends how important the expense account in this audit. Those expenses has been excluding the salaries and allowances, right? Now we could also have a look of the nature of the business. This business is a non-for-profit organization. So what is non-for-profit? Yearly, their revenue is from grants, from donations. So their main business activity is actually attracting the grants, attracting donations, but allocate those resources in different expenses items, right? So actually, those expenses are the major activities of this organization. Is that right? So 65% missing records on those important expense items by nature and also by quantity would be not just materials and also tends to be quite pervasive. Because when we audit a non-for-profit organization, the purpose is to ensure, so that one of the main purpose is to ensure they properly allocate their received grants or donations to the proper channels, to the proper situation. Is that right? Okay. So, is this material? Yes. Is this pervasive? I think also. Yes. especially for the nature of this organization. So what is a proper audit opinion in this situation? In theory, yes, so disclaimer of opinion would be appropriate for this situation. Okay. All right. So got it. Right. So situation B. Skyscraper is a building contractor with a varying workload. In order to compensate for the irregularity of the contracted building projects, the company also purchased large vacant blocks of land that is later subdivided for the construction of houses and units. So it sells these on its own account. Your analysis strongly suggests the apportionment of costs to the houses and units sold have been kept low in order to boost the profit. This has resulted in the overvaluation of those unsold properties. The directors of the company do not agree to make correction. Why not averse? So Megan, do you mean situation A? Yes, okay. So, okay. So Megan's question is for situation A, why we use disclaimer of opinion rather than the adverse opinion. So let's go back to the types of audit opinions. So if the reason of the modification is due to limitation scope, you only have two options. One is qualified opinion, the other one is disclaimer. If the reason is because of disagreement with management, or in other words, is due to material misstatements, you have two options. One is qualified opinion, the other is adverse opinion. So here, the case led us to the limitation scope. So you choose disclaimer because it is material and also pervasive, right? Okay, cool. Okay, so go back to the situation B. Your answer. So first, is this about modified or unmodified? In other words, are there any misstatements? Are there any limitation scope? So that is material misstatement. In other words, that is disagreement with management, right? Okay. So in this situation, do you think it's material? Is this material? Why? Why you could conclude it is material? So it seems the effort. So even though this company is a building contractor, but they put a lot of effort in purchasing the large blocks and to do their own constructions for sale. So, block purchase and selling constructed properties seem to be important revenue sources or business activity for this company, right? So it is material. And then, is this pervasive? It is important business, but seems not the main business. Not likely pervasive unless opposite evidence presence. Is that right? So also it's only about over the valuation of a non-man business. Okay, so what is the opinion? So qualified opinion due to material statements, right? Okay, number 3. So the big event company arranged for popular overseas entertainment artists to perform in Australia. The band was booked for a big event to play in major cities across the country. So the written contract required the company to pay the band in US dollars, but in order to reduce cost, it didn't hedge the foreign exchange. Subsequent to the year end, Australian dollar fell against US dollar and substantial loss relating to the band tour was predicted. So management decided, tried unsuccessfully to renegotiate the contract. So they are not able to get finance to cover the expected shortfall. They have canceled the tour and expected a substantial claims from the band. Now it is clear to the auditor, big event company do not have the income, cash, or other assets to sustain such a loss. Is this unmodified? Is this about material misstatement? Is this about limitation scope? Or is this about something else? Something else, okay. So what is the something else here? Going concern, that's very good, okay. So it seems to be something about the going concern because not able to sustain this loss, right? So in terms of going concern, in this situation, do you think it's the, so which opinion you like to choose? Yeah, so for going concern issues, it could be adverse opinion, could be unmodified with emphasis matter, could be qualified or adverse opinion for different situations. Okay. Unmodified with EOM or qualified opinion or adverse opinion. Which one you choose? Why would you choose adverse opinion? I think the case suggests the company couldn't survive. Therefore, should be prepared, the financial statement should be prepared on the liquidation basis rather than the normal going concern basis. Is that right? So in this situation, if we go back to the previous slides, so auditor would issue the adverse opinion. Got that? Yes. So the going concern assumption is not correct because this company now should use the liquidation basis accounting. Okay? Any question on this one? So answers are here, and so you could revisit that after the class. Okay, so let's do another try. So those are the lecture examples. Okay, so the following are 5 independent situations. For each, state the types of the audit opinion and also explain why. Okay, so in the first one, for ABC Limited, inventory is, you suppose the inventory might be material overstated, but management refused to allow you to expound the scope of your test. Inventory represents 75% of the total assets. So can we also follow the logic? So what is the key issues in this situation? Limitation scope or material statements? So the key issue is you suspect inventory is overstated, but management refused to allow you to do the test, right? So that's the issue about limitation of scope. And also that is limitation scope imposed by management on over 75% total assets. So is this material? Yes. Is this pervasive? And also pervasive. So what is your audit opinion here? Disclaimer. Okay, that's very good. So let's see the second case. DEF company. They disclose the lease obligations in the notes. The auditor believe failure to capitalize those leases is a departure from applicable accounting standards. However, the client is unwilling to accept the auditor's recommendations. So is this unmodified? Is this limitation scope, or is this material misstatement? So this is a disagreement with management, or in other words, that is material misstatements, right? Okay. So is this material? So departure from accounting standards is by nature is always material. Is this pervasive? Sorry, here. So maybe not pervasive because it is only about the lease accounts. So qualified opinion due to disagreement with management, right? Number three has the longer case. So auditor is doing the audit for a GHI company. Auditor was not engaged until the balance sheet date. They are not able to physically observe the inventory stock take. Inventory is highly material. On completion of the audit, auditors is satisfied the company's financial reports are fairly presented, about which the auditors was able to perform alternative audit procedures. Okay. So that's got three options. Nothing wrong, something wrong. Okay. So in case three, are there anything wrong here? So I guess in this situation, nothing wrong, because auditors should attend the inventory stock take unless alternative audit procedures are satisfactory, right? So nothing wrong, so that is unmodified opinion. It's understandable. Any question? Oh, good. Okay. 4. GKL produce submarine parts and rely on significant contracts with the Australian Defence Department. Due to the recent budget cutback, Defence Department will not be proceeding with 2 significant contracts to be entered into next year. So that's the similar going concern issue. Of course, it is material. So the company, do you think without this contract, the company will survive or not? So it's not likely to survive, and you could actually add in different types of explanations into a discussion, right? So if it's not likely to survive, so it's material, and also do you think it's pervasive? So also tends to be pervasive. So what is our opinion? Adverse opinion due to going concern issue, due to pervasive going concern issue, right? Of course, so for case 4, so if your arguments is very clear, the situation is material, but you also discuss it's not pervasive. So your conclusion about qualified opinion for going concern could also be acceptable. Okay. So now let's move on to the next paragraph. Okay. So following the examination, the client do not wish to make full disclosure of the situation in the notes. Now, okay. All right. So the clients do not want to make full disclosure of the situation regarding the going concern in the notes. Also, the bankers will not be relying heavily on the audit opinion. The client is a slow payer on the debts. So with those further additional information, still going concern. And the additional paragraph tells us is so not likely to survive. So should be liquidation basis. And also disclosure is incorrect. So now you only have one choice, adverse opinion. Okay. Could you see the difference? Okay. Now number 5. Same as 4, but clients make full disclosure of the going concern issue. What has been the full disclosure in this situation? So that means actually the accounting is prepared on the liquidation basis, right? adopted? If so, that's unmodified with UM. However, if still adopting the going concern basis, disclosure is not full. So actually will be adverse opinion. Is that right? Okay. So this is our procedures regarding the audit opinion questions for the lecture example. In the lecture example, we also have another example here. Let's use the next maybe 5 minutes to do this question as well, okay? Just read the question by yourself. And then I just want you type in your answer. Actually, so I have already highlighted the important information in red. Ready? Okay. So in this question, the difference of this question is there's nothing to indicate, there's nowhere to indicate the situations are independent. So you need to consider all the situations in this case together, combined, comprehensively. Right? Okay. So the first part tells us, so the accounting for inventory is on the loss in first out LIFO basis. Apparently it is an Australian company because we are in Australia, right? So Country Lane use a just-in inventory management system. In previous years, effect of this departure from Australian accounting standards was not material. In the current year, it has been material due to unexpected cancellations of major orders, the en route to this destination. So in order to reduce the freight cost, the company temporarily stored the goods in Indonesia, hope for an order from another Asian customer. Also, you were not of this problem until after balance date and didn't conduct a stock take on the inventory. You have also been told some of the inventory has since been shipped to a number of different customers to fill out the outstanding orders. Now, the available audit procedures would unable to validate existence of the inventory. The relevant inventory has been recorded as over $1 million. Audit procedures also stated, if we are using the proper first in, first out basis, it should be recorded as $1,750,000. Materiality for the audit has been set as 500,000. Okay. So basically, so in this question, it is about audit, but audit, it is audit on inventory. So one part of the financial statements. It is about inventory audit. Let's say yearly, that is material by nature, right? You agree? Okay. Second, what is a problem? So use LIFO. That is deviation from accounting standards. Not allowed. So also seems to be quite material by nature. Is that right? What could be the other problem here in this case? So also there is a problem in validating the inventory. So it seems also something about limitation of scope, right? So also material. Material or not really depends on the amount relevant. So it seems the difference is 500,000. So also material, right? Okay. So that's our basic analysis. Sorry. So that is our basic analysis from this example. So if we combine those analyses together, what is your final conclusion? So it is some conclusion based on limitation of scope and also disagreement with management, right? But so if our analysis stop here, you may have 3 different options: adverse, qualified, or disclaimer. Which one you think appropriate? Hi, hello. If our analysis stop here, we could conclude there's something wrong with limitation scope and also disagreement with management. But therefore, there might be 3 different options: adverse, qualified, or disclaimer, right? So in this situation, which one you think appropriate? Gonna set adverse and then disclaimer. So if it is adverse, so that will be pervasive material misstatement. So do you think the material misstatement in this case is pervasive? So let's see, okay, so the materiality has been set at 500,000. So yearly that is maybe 1% of the total assets, 3% or 5% of the total profit. So it just reached the materiality threshold. So it is material, but by number, it might not likely to be pervasive, right? And also, it is about the inventory account. It's not the whole financial statement. It's only one part of the account of the financial statement. And also the misstatement is only about one part, certain percentage of the inventory account. So it's not likely to be pervasive. So adverse is not right. So similarly, do you think it's disclaimer? So in terms of limited scope, is this pervasive? Only about inventory account, only about certain amount of the inventory account just reach materiality threshold. So not pervasive. Is that right? Okay, so that's our analysis on this lecture example. What we want to do here in this question. Sorry, yeah. So if 2 or more opinions has been considered together, what is order opinion shall I issue? For example, if it's qualified opinion on material misstatement, but unmodified opinion with emphasized matter ongoing concern, then you need to combine them. Mechanismly, it's like qualified opinion with emphasized matter ongoing concern, right? But in the lecture example, in this case, everything is about inventory. So it seems the problems about material misstatement also plus problems about limited scope, both about inventory account and only just reaching the material threshold. So to combine them together, that is qualified opinion due to both limited scope and also material misstatements, but not pervasive, right? So I think now we cover all the questions we're supposed to cover in the mini lecture and also the tutorial. So I hope after you accompany me with those 2 hours tutorials, at least for the topics in lecture 11, you should do it quite well. Remember the 2 key topics. One is subsequent events, the other one is order opinion. You should be very confident with those, right? Otherwise, please email me. Okay. Any further question? Yes, Megan. So in this case, okay, so it's only about inventory account. For most of the common sense, for our common sense, so inventory account itself, of course, will be material, but it's hardly to conclude by itself, it will be pervasive for the financial reporting, right? So we don't really have the full information here, but in common sense, for most of the common business, inventory is just a part of the current assets. So not so likely to be pervasive for the whole financial statements. And also, the claimed misstatements here is just about just reaching the material threshold. So by the amount, also not likely to be pervasive. Okay. All right. So I think we finished all the questions. What is the threshold? Okay. That is the threshold. Materiality has been set as 500,000, right? Okay, all right. So if you have any further questions regarding lecture 11 examples or the lecture slides or the tutorial questions, feel free to ask. I think so all of you here should be very good on this topic now. Okay, so see you next week. If it is more than the threshold, okay, good question. So let's see. So actually, so in this question, we didn't make that very, very technically, but we could analyze in a more technical way. So for example, for the materiality, let's suppose, because as we discussed in lecture, I think lecture 5, for the materiality threshold, there are some pre-assumed criteria, like it usually would be around 1% of the total assets. Okay, right? Suppose that is 1% of the total assets. So if we're looking at the identified potential misstatement, is very likely to be 500,000, right? So it's just equivalent to the materiality threshold. And also you could also argue, so actually the inability to validate the test might be more than that, because the potential misstatement, if it's not likely to be validated, the potential misstatement could be up to the recorded value, right? For example, if you are using this number or this number, so that will be 1%. So this is, suppose this is 1% of the total assets. This might be 2.5%. This might be 3.5%. Neither of that is pervasive, is it right? So the judgment really depends how much more has been identified, or how seriously the nature has been classified. But in this case, even if we use this number or this number, none of them could be rated as pervasive. Okay? But if you are giving, for example, if you are giving in the question, so we say the total assets is actually $2 million, then the inventory account will be the ultimately important significant accounts in this company. And also the potential misstatement will be pervasive in this case. Yeah. So by quantity, by percentage, I think over 50% misstatement could be argued as pervasive. Over 50% by percentage could be argued as pervasive. Okay. So, any further question, please? All right. Okay. So, see you next week. And also, thank you